As the U.S. markets closed out the session on Thursday, November 13, 2025, Nuvve Holding Corp, ticker NVVE, was not just active, it was explosive. The stock finished its day at $0.5054 per share, a staggering gain of 223.56% on the day. That is not a typo. The stock more than tripled in value in a single session, backed by an absolutely colossal trading volume of over 1.25 billion shares. This is a company with a micro-cap valuation, and it just saw volume that would make some large-cap names blush. The immediate expectation when you see a chart like that is that you've missed the boat, or that this is a purely speculative frenzy, a pump-and-dump scheme lighting up the Robinhood app and SoFi Invest platforms, destined to collapse just as fast as it rose. You might see a stock that was trading for pennies and assume this is just noise, a technical glitch, or a meaningless gasp from a dying company. But the reality of this move is far more complex and frankly more interesting than simple speculation. This wasn't a random spike. This colossal surge was ignited by a tangible, fundamental piece of news. Just before the market opened, the company announced that its Japanese subsidiary, NUVVE Japan, had secured a significant aggregation agreement for a stationary battery storage system in Niigata. This deal, described by the company as a critical first step, involves a large-scale battery and aims to generate revenue by participating in Japan's supply-demand adjustment market. This is a real contract, a real expansion of their energy management platform into a new vertical in a major international market. This is the kind of catalyst that investors, desperate for a sign of life from Nuvve, have been waiting for. So, while the expectation is that a 200% plus move in a day is pure fantasy, the reality is that it was sparked by a concrete business development. However, the magnitude of that move, that 223% reaction, is where the speculative reality re-enters the picture. The stock's history as a low-float, high-risk entity, combined with an enormous amount of short interest and a looming delisting threat, created a perfect storm. The good news lit the match, but the structure of the stock itself provided the rocket fuel. Let's establish what most people believe about a stock like Nuvve. The general narrative has been one of struggle. This is a company operating in the vehicle-to-grid or V2G space, a concept that is intellectually appealing but has been incredibly difficult to commercialize profitably. The idea is to use parked electric vehicles, especially large fleets like school buses, as a virtual power plant, allowing the grid to draw power from their batteries during peak demand times and then recharging them during off-peak hours. This, in theory, stabilizes the grid and creates a revenue stream for the fleet owner. It's a compelling story, but Nuvve has been burdened by high cash burn, inconsistent revenues, and a stock price that has been in a steady, painful decline, forcing it to face a potential delisting from the Nasdaq. The exchange has warned Nuvve that it's out of compliance with the minimum bid price requirement. The company has until December 31st, 2025 to regain compliance, which typically means getting its stock to close above $1 for a set number of consecutive days. This context is why just last month, shareholders approved a measure giving the board discretion to enact another reverse stock split at a ratio anywhere from 1-for-2 to 1-for-40. This is the challenging reality that yesterday's news crashes into. The market sees a company on the ropes, facing a deadline and preparing for a reverse stock split, which is almost universally seen as a sign of weakness, a financial maneuver to maintain a listing, not a marker of health. This move doesn't create value, it just consolidates shares. But then, Nuvve produces this Japan contract. Suddenly, the narrative is challenged. Is this a company on the verge of failure, or is it a company on the verge of a turnaround that just got its first major validation? Yesterday's trading volume suggests the market is fighting ferociously over that very question. This isn't the kind of activity you see in stable blue-chip names like Apple stock, or even in a high-growth, high-profile name like NVIDIA stock. This is the raw, unfiltered price discovery of a high-stakes bet. People aren't using Schwab Intelligent Portfolios for this kind of exposure. This is the epitome of active, high-risk self-investing. The recent price movement is everything. The run-up didn't happen in a vacuum. Before this news, the stock was languishing in the 0.15 range. The pre-market announcement of the Japan deal was the clear trigger. What followed was a classic short squeeze layered on top of genuine buying interest. Traders who were betting against the company, holding short positions, and expecting the stock to go to zero were suddenly faced with massive paper losses. They were forced to buy back shares to cover their positions, adding to the buying pressure. This cascades as momentum algorithms on platforms like Interactive Brokers pick up the unusual volume, and retail traders, seeing a stock up 180% before the bell, pile in, hoping to catch the wave. This explains how a good piece of news turns into a 223% gain on 1.25 billion shares. It's a mix of hope and technical panic. This is precisely the kind of volatility that automated online investment platforms are designed to avoid, and it's why a diversified Fidelity mutual fund remains a cornerstone for most portfolios. So what does Nuvve Holding Corp actually do? As we mentioned, it's all about V2G. Their platform GIVE, Grid Integrated Vehicle, is the software and hardware that connects electric vehicle batteries to the grid. Their primary focus has been on school bus fleets. The logic is sound. School buses have large batteries. They sit idle for most of the day, especially during peak energy demand times, and all summer, making them perfect candidates for a V2G program. The company partners with bus manufacturers, utilities, and school districts to get these systems installed. The Japan deal is so significant because it's not V2G. It's an aggregation deal for a stationary battery. This suggests Nuvve is successfully pivoting their energy management software to be useful for any large-scale battery asset, not just vehicles. This dramatically expands their potential market, and that is what has the market's attention. It's a sign that their core technology has applications beyond the very difficult school bus market. This brings us to the future outlook, and the tension between expectation and reality is razor thin here. The big question is, was yesterday a one-day wonder, or is this the start of a sustainable new valuation? This is where every investor needs to be brutally honest about their risk tolerance. If you have your retirement in Fidelity IRAs or trust Fidelity Wealth Management to handle your assets, NVVE is probably not for you. But for those managing their own individual brokerage account, the calculation is different. The bullish expectation is that the Japan deal is the first of many. It provides a proof of concept for their stationary storage aggregation, opening up a new, potentially massive revenue stream. This new revenue, combined with their existing V2G projects, could be enough to stabilize the company, end the cash burn, and make the delisting threat a distant memory. If they can sign a few more deals like this, the stock won't need a reverse stock split to stay above $1. It will stay there on its own merit. The bearish reality, however, is equally compelling. This is still a company that is, by its own admission, facing a compliance deadline. The Japan deal is one contract, and its full financial impact is not yet clear. The 1.25 billion shares traded represent a massive, chaotic turnover. Many of those buyers are short-term traders who will be looking to sell and take profits, creating immense downward pressure on the stock. The company's underlying financial health is still precarious, and it will almost certainly need to raise more capital. The risk is that this spike is just a temporary reprieve. This is the kind of situation that makes investment help so valuable, as it's easy to get caught up in the emotion of a 223% gain and forget the underlying dangers. We've seen this story before with volatile stocks, and it often doesn't end well for those who buy at the peak. What do you think is the more likely outcome here? Is this Japan deal the signal of a genuine turnaround for NUVVE, or is this just a speculative bubble amplified by a desperate company? Comment below with whether you think NVVE will be trading above or below $0.50 by the end of this year. In the final analysis, the story of NUVVE's incredible surge is a perfect case study in market dynamics.